Whoa, market watchers. The Dow futures just took a 200-point nosedive and the Nasdaq is officially in correction territory. We're talking a 10% drop from its recent peak. What's going on here? Buckle up because we're diving deep into this market mayhem. This isn't just another blip on the radar. We're seeing a confluence of factors putting pressure on stocks. From rising Treasury yields to a mixed bag of job market data, investors are getting spooked. But don't hit the panic button just yet. Remember, every market dip is a buying opportunity for those who are prepared. Stick with me as we break down the latest developments and figure out what it all means for your portfolio. Let's talk about these pesky Treasury yields. They've been on a tear lately, with the 10-year yield hitting its highest level in over a decade. Higher yields mean higher borrowing costs for companies, which can put a damper on economic growth. And then we have the job market. The latest report showed some decent job creation, but wage growth came in a bit softer than expected. This has some folks worried about the strength of the economic recovery. The Federal Reserve is walking a tightrope here, trying to keep inflation in check without derailing the recovery. Their every move is being scrutinized by investors, and even a whiff of uncertainty can send the market into a tailspin. So, what are the experts saying about all this market turmoil? Keith Lerner, Co-Chief Investment Officer and Chief Market Strategist at Truist Advisory Services, says we shouldn't be surprised by this pullback. The market got ahead of itself, Lerner told me. We had a very strong run and a pullback was overdue. He's right. The market doesn't go up in a straight line. We're bound to see some bumps along the way. The key is to stay calm, stick to your investment plan, and not make any rash decisions. Section 4. The week ahead. Key events and data to watch. Looking ahead, there are a few key events and data releases to keep an eye on. First up, we have the Consumer Price Index report on Wednesday. This will give us a read on inflation and could influence the Fed's next move. Then, on Thursday, we'll get the Producer Price Index, another important inflation gauge. And finally, on Friday, we'll hear from Fed Chair Jerome Powell at the Jackson Hole Economic Symposium. Investors will be hanging on his every word for clues about the future of interest rates. It's going to be a busy week, folks. Stay tuned. Section 5. Navigating the choppy waters. Actionable insights for investors. So, what does all this mean for you, the investor? First and foremost, don't panic. Market corrections are a normal part of the investing cycle. In fact, they can present excellent buying opportunities for long-term investors. Now is the time to revisit your portfolio and make sure it's aligned with your risk tolerance and investment goals. If you're feeling skittish, you might want to consider shifting some of your assets into more conservative investments, like bonds. But if you're feeling bold, consider this a chance to scoop up some quality stocks at a discount. Just remember to do your research and invest in companies you believe in for the long haul. The market may be volatile right now, but that doesn't mean you should abandon ship. Stay informed, stay disciplined, and remember that time in the market is your greatest ally.